tell us a little bit more about results. I'm curious as to margins. How were margins grown this quarter?
Yeah, so we're very pleased with the quarter. Our revenue was up 10%, year over year. Earnings per share at $1.20 was up 20%. If you exclude some discrete tax, one-time tax, actually we grew by 35%. Our backlog's up 6%. But you actually zeroed in on the most important thing. Our operating profit margin was up over 100 basis points, demonstrating the progress in our transformation journey.
Absolutely, and what a journey it's been in the last couple of years, almost a complete transformation. You're pretty uniquely placed to tell us about any sense of disruption to the global manufacturing landscape from the likes of coronavirus and obviously the protracted trade negotiations. What have you seen among your clients, both governmental clients and the governments themselves?
Yeah, so the government sector is a big part of our company globally. And when you look at what we do at Jacobs, it's about national security, it's about infrastructure, climate change, 5G, the things like attacking sea level rise and making sure we get renewable energy in the right place to address the overall sustainability goals. So it's, for us, the demand is very strong globally. Even in the face of some temporary disruption like Brexit or some other things, we're seeing just a very optimistic future on a global basis.
Just to follow up on that, Steve, do you think governments are entering a phase where they're more willing to spend money on infrastructure projects? There's been a lot of talk in financial markets about a fiscal push, both here in Europe and in the United States and potentially in Asia as well. Do you see this fiscal spending taps being opened more as we work our way through 2020?
Yeah, I think 2020 and 21 is going to be transformational when it comes to government spending. The UK is a great example. Highways England, for example, has already publicly disclosed that they have a strategy to increase spending by more than 60% over the next 5 years to really address the need for infrastructure upgrade across that region. The United States, both parties want to see a federal spending bill, and the question is whether that's going to come before the election or after the election. But on a global basis, we believe that there's a significant spending gap that everyone's coming to grips with.
Just to come back to you guys and the transformation that you've gone through, Steve, would you classify yourself now as an ESG company? It does seem as if increasingly having that label, having a high ESG score, is a way to improve your share price performance. Are you seeing any evidence of that?
Absolutely. There's been a lot of talk about the purpose of corporations in the last 12 months. Actually, we addressed that about 4 to 5 years ago with our focus on culture, ESG, all elements of sustainability, climate change, diversity, the culture that we have in the company. And I think it's been proven lately the companies that are the most diverse, that are focusing on the culture, are actually the companies producing the best shareholder value over the last several years. So we're absolutely in the mix of ESG. From a climate change standpoint, as I mentioned earlier, wherever coastal cities are around the world, we're addressing sea level rise, storm surges, hurricanes, earthquakes across the globe. And that's right in the heart of a sustainability strategy, which we call Plan Beyond.
What about the acquisition, Woods Group's nuclear business, Steve? Are you still seeing that closing in Q2? And are there other acquisition opportunities this year?
Well, I'm glad you brought up acquisitions. Clearly, the CH2M acquisition that we made back in 2018 got us on this track of transformation. Then we came right out with the KeyW acquisition, which put us into intelligence, surveillance, reconnaissance, cybersecurity, space intelligence, and that's off to a great start. We are confident we'll close the Wood acquisition at the end of this quarter, and at that point, we're going to strengthen our global nuclear footprint, very much involved in nuclear remediation and deep technical expertise, scientific expertise.
Steve, what does the prospect of a change in leadership in the United States mean for a company like Jacobs, given that, coming closer to November, there will likely be all sorts of issues on the table, including things like the deficit?
Yeah, for us, we're pretty agnostic, whether it's the U.S. or around the world, on, at the end of the day, which party wins or which individual wins. We believe that in the U.S., whether it's the Republican Party or Democratic Party, there's a commitment to get at infrastructure. It's a crisis in the United States, whether it's bridges, airports, roads, the need for advancing digital technology. I think that's very important. We see the government coming to grips with they need to take more risk around innovation. And so we're just anxiously awaiting to see the outcome of that. And at that point, we believe either party, whoever wins, will commit to infrastructure.
Steve, just one final quick question. I want to come back to the issue that Vonnie raised a moment ago about M&A. The Wood Group spin-off, I think, is fascinating in as much as a lot of industrial companies are under pressure at the moment to spin out assets. Do you see that trend continuing, and do you see yourself being a net beneficiary from that?
Yeah, we do. And I think what we've proven as a company, we're not only an acquirer. We made a major move strategically a year ago to divest our oil and gas business. The legacy of Jacobs, a third of the company. And what that has demonstrated that we're committed to the secular growth trends. We see a lot of other companies under pressure or looking to positively transform their portfolio. So yes, we do believe there's going to be significant opportunities out there. And for us, we can be patient. I think today we announced $1 billion increase in stock buyback. We believe, first and foremost, our best investment is Jacobs. But you should expect that from time to time we'll be in the M&A market as well.